Well, hello and welcome everyone to your midweek live. This is Sankit here, and we'll be going through markets, going through our process, see where we are at, refining our process, doing our due diligence, and see where the opportunity lies in the upcoming couple of days here. As always, we'll be talking about markets, break it down from a top-down analysis, look at what's happening in the broader markets, then take a look at currency baskets, take a look at the news, and then we'll go through and take a look at some possible setups. Let's get into it.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So jumping into market analysis, let's just take a look at where we are with the headlines and the numbers. And the markets are slightly lower. So overall, we know market has been melting up. And that's definitely has kept the markets up, overall market volatility lower. And we actually sort of melted up to new all-time highs. So at this point, the question is, where do we go from here? Markets are definitely taking a bit of a short-term pause. So I won't be surprised that we see a further pullback. I mean, price action today was a little bit dicey. We'll take a look at it when we look at the charts. But just understand where we are in the broader market theme. Now, talking about central banks, we had two central banks this week, and both sort of held interest rates. But the RBA was the one that caught by surprise because they were expecting to hold cut rates, and they actually end up holding rates. So now, generally, whenever we see a surprise, that's a good news. So that's a good news for the Aussie. So we did notice the Aussie did strengthen up a little bit, but again, I think that strength hasn't really gone too far. We'll take a look at the chart, but that was the surprise factor that we had this week. RBNZ, as expected, they held rates, nothing really happened, and it still remains the weakest currency. Now, volatility is low, and it's not just the FX market. Take a look at across the board. The broader markets is a low volatility. Take a look at crypto markets, low volatility. Take a look at currency markets, low volatility. So lower volatility is a theme here, but it's very important to know what the volatility is, because that's how you can kind of pick the time frame. The lower the volatility is, the higher the time frame I usually trade on, because that's where we get a lot of short-term choppiness. But you can see where the trend is, but there's a lot of short-term choppiness. On the other hand, we could get a high volatility where things can change from a day-to-day basis. Now, that's where I have to adjust my time frame and go a bit lower, because I can still get a sizable move in a shorter period of time and get in and get out. So that's where how markets sort of shift back and forth. And we saw that back in March and April, the volatility was high. Things are moving a lot faster, and I was definitely trading a lot more, and I was trading more shorter term timeframes. Now, I can see a lot of good setups on a 4-hour chart, but you have to be trading the right time frame and holding things accordingly. Now, that's really where we are in the markets. Now, let's just take a look at the numbers. And you can see that the biggest move so far this week has been in the dollar yen. And we talked about dollar yen. We talked about the negative correlation. And overall, I think this is a currency pair definitely has more potential. We'll talk about dollar yen when we look at the chart. But I think that's a big move here between dollar and yen. If you just take a look at that pairing, it's more like 1.5%. Now, outside of that, the second best performer is the Swiss franc. And, we talk about European currencies. As you can see, euro sort of falling behind their pound, after that big sell-off that we saw last week. And as we discussed last Wednesday, maybe this is a buying opportunity. And sure behold, we didn't see any further sell-off for that. So that was a good little short-term pullback to buy off of. But the Swiss franc is the one I would say is doing the best. And here's where I think Swiss franc is sort of uniquely positioned, because we have seen outperformance of Swiss franc. Now, anytime we see a risk-off environment, every time we see a pullback, now Swiss franc rises too. So I think it's just more like positioned very well, where it's outperforming and is also acting as a safe haven currency. Now, dollar on the other hand, I must say that, if you take a look at where the dollar is one of the worst currencies so far this year. I mean, down 7.5%, 8%. So dollar has done really poorly, and we are seeing dollar sort of firming up a little bit here. So which means that it's not really going down anymore. It's kind of holding steady to maybe slightly up. So dollar is the one that could be the one maybe on a rise in the short term. So we'll take a look at the charts and then look at this negative correlation between the Aussie and the Kiwi. Aussies did strengthen off of this no rate cut, where RBNZ just stayed weak. So I still like Kiwi the short the best. Out of all the major currencies, that's the one where we're not really seeing money going. That's where we're seeing weakness. Now, Aussie did pop up. The question is, can it strengthen further, or is it just going to really fall right back lower? So we'll see. At this point, I think Aussie likely to kind of follow what the Kiwi's doing. But at the same time, we're going to take a look at the charts and see if there's any sort of divergence that's going on there. Now, CAD is kind of holding steady. It's not a whole lot of direction. They're seeing Euro kind of slowing down as well. But overall, I think we haven't seen a sort of a big change in the movements. Swiss franc is trending higher. European currencies are doing better. So it's kind of moving along the same lines, not a whole lot of change in the direction. Now, when we take a look at the broader markets, and this is where we're seeing a bit of a pullback after, again, making new all-time highs. The question is, do we have further downside risk in the markets, or is it going to continue rising? I think that's something we'll take a look at the charts. Crypto is slowly moving higher. Now, the question is, what are you trading in crypto? And right now, Ethereum and Litecoin is really doing the best. But outside of that, Bitcoin is sort of consolidating here. Gold slightly pulling back, and oil nicely higher. So not a big change in the markets. Here we are taking a look at the overall results in the crypto market. You can see Ethereum is actually doing the best here compared to the Bitcoin kind of being down slightly lower. So if you're looking to trade cryptos, I think Ethereum probably kind of looks the best here as far as the momentum goes. Now let's go to our market outlook. And then as we take a look at things, okay, what's changing the markets? So here we are with the S&P chart. You can see that we actually did break up above that resistance level, and pretty much after that we have kind of gone higher, seeing consolidation here. Today's candle looks interesting because we did pop up higher, but then totally rejected it. So question is, where's the market going? Well, right now you can see that it's in a consolidation phase. It's not it's not exploding higher the way it was over here, and it's not really exploding lower. It's just consolidating here. So not a whole lot that we can take out of this pattern here. Is more like a consolidation pattern. The thing is that it's still above those moving averages, and even though if it pulls back further, it's still what do you call it, a bull pullback. It's still in an uptrend. The question is, where is the next move? And right now, I think it's a consolidation. I won't be surprised if we do pull back a little bit further, but realize that we are sitting at all-time highs, and usually market stays stronger for a bit longer, or whenever we see this kind of price action. Now, when we take a look at news events, well, news events wise, we already have the central banks out of the way. Now, tomorrow, unemployment claims, we really haven't seen a big move off of that. And then pretty much on Friday, we have the GDP. So we don't have a whole lot of risk when it comes to news events, which is, again, a good thing, as when volatility stays low, you have less of the events. You can tend to, follow those trends a bit longer as they're moving along. So where we are in the markets, this is where the trend score is. As you can see, the volatility or the weakness is really in the Euro CAD and Kiwi here, where the outperformance is actually in dollar, Swiss franc, and even the Aussie here. Yen is kind of falling down here. Pound is kind of right in the middle. But what we're going to do here is just take a look at the charts as we go live in the markets. Take a look at velocity score, but also take a look at where we stand from a technical perspective. So let's just jump into our possible trades ahead.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
And this is where you can also take part and share any ideas you're looking at, any setups that you're looking at. If you want any questions, just go ahead and type in the chat box. I'll take a look at that as we go. I did share some setups on Discord this morning, so make sure you're always checking out Discord, because if I see something, I'll post it over there. But definitely noticing some decent setups. Here's the first thing I want to talk about. Here's the first thing is the broader markets. I must say that based on the candlestick today, it rejected it all towards that high, and it rejected that right there. So it's not a good looking candle here. You can see that pretty much since then, we haven't really broken sort of, either way. We did reverse, but it really hasn't broken lower. If this can get below this area, I think we can see a further pullback in the market. So now, why is that important? Well, if that's what happened, if the market does pull back, then I need to go towards fly towards safety. And when you go towards fly towards safety, then where I need to back off on that yen short. I need to anything that could do well in a risk-off environment. That's where I need to sort of make that adjustment. So that's why it's important to know what the risk sentiment is. So overall, you can see the markets, it's slowly consolidating. We'll see where we close today. But it was interesting today how, here's the shorter term chart, and you can see that we did go higher. And it almost looked like we were going to break higher, but then it quickly rejected that. So right now, we're just hanging off this little consolidation phase. But if it does break lower, won't be surprised that we see a little bit more further pullback. Now, that's really where we are in the broader markets. I also want to show everyone about volatility. So here's the volatility. You can take a look at VIX for the broader markets. As you can see that where we are in volatility, we are at the lowest sort of a stage since pretty much at the beginning of the year. So why volatility is important? Because, we always talk about expectation, and sometimes we love those quick moves, or we love that big range, big volatility, but realize that for that, we need the market backdrop. If the market backdrop is not that, so that means that I can't really go in and make a couple hundred pips in a very short period of time. I need to sort of use the right vehicle to get to that point. And that's why your time frames are your trading vehicles. You know where you're going. Now you need to use the right vehicle to get to that point. So this, when volatility is really low, I really like jumping on 4-hour charts, because I can still be in a trade for longer, but not really get chopped up by short-term volatility, because that's not the case here. Now, when we take a look at currency markets, how do you measure volatility? Well, one of the things that you can take a look at for volatility is ATR. ATR is a good way to take a look at what the volatility is. And you'll see, let's just change the chart setup here. So yeah, I want to just talk about volatility here. So you'll see one of the things is that we are a lower volatility. So here we are. Here I got volatility at the bottom, and you can see volatility where we see peaks and we see the fall. And you can see how yen is in a falling volatility. ATR is just slowly going lower. So, based on that, you can kind of see where we are from a volatility perspective. So you can use the right strategy for it. But like I said, 4-hour charts, it's perfect when I'm taking a look at things on a lower volatility, but when I'm seeing a decent trends in place. So we went from a market where things were lost sideways to now things are a bit more directional. I mean, take a look at the charts for the Swiss franc, and you can see that's where, after a big consolidation phase, we're getting a big advance. And now, not only that big advance, but take a look at that. We are making new highs here. I mean, this is where price action, where could it pause? It's actually just continue to break that level. So again, Swiss franc actually still looks the best here. I'm not really seeing a slowdown here. You got these moving averages here. Everything looks bullish here. Now, when do I change that outlook? Is when we start to break things technically, where we just make a lower low with a lower high. Then there's a end coming to that move here. But right now, as of now, it's still moving higher. So Swiss franc still looks the best as far as the trend goes. Euro is showing a bit of a slowdown, but you can see even though it's things are slowing down, it's not really breaking apart. So euro stays bullish, and then lastly we have the pound. As you can see, pound has kind of fallen off that the strongest currency here. I mean, I would say this is more of a range with a lot of back and forth. This is where we were last week, and after that we got a nice recovery. But again, for me to play this directionally, this needs to kind of break above that resistance here. But overall, looking still pretty steady here. So not a whole lot of change. European currencies were good for the last month, and they continue to be doing so. Now, when I take a look at growth currencies like the CAD here, you can see CAD is actually just rolling back and forth. At this point, it actually looks more like a little bear rally to me. So I actually do like the CAD short here. So we'll take a look at some CAD pairs. The Kiwi, you can see this thing had range bound, but it is started to show some signs of weakness. Now, I'm going to set up an alert here and say, well, let me know if this is going to break the support area, because I think that's where, we can see a bit more acceleration when it comes to the movement there. So again, we want to see if this breaks that support there. But when we take a look at some of the Kiwi setups here, I mean, there's a lot of setups that are actually moving nicely. Aussie, where do we stand with the Aussie? Remember I said, we did see a rally here, but is that rally going to sell, or is that rally going to continue breaking out? So again, same thing for this one. I need this to get above this line of resistance. So again, let's set up some alerts here. Notify us, let us know when it's really breaking out higher. So this thing again remains range bound. So you can see that not a whole lot of change from last week. So you pretty much have to kind of keep the same order of business here. Yen continues to be, falling lower, but remember I talk about where you enter is important. You can see where, bear rallies are getting shorted. We're still in a rally formation here. So as far as the velocity goes, it's going the other way, meaning it's not the right time to jump on the bandwagon here. But overall, you can see the direction is pretty clear. It's about where you entered and what time frame you choose. Right now, it's in a bear rally formation here. Now, let's talk about dollar. I think like I said, I started to see dollar more stabilize a little bit here. So here's a chart here. I talked about last week, and anybody that was really looking to short the dollar and said, hey, take a look at where we are. This is a very important level of support. And dollar is finding support here. Now, that's a weekly chart. Now, let's go on the daily chart. Now, on a daily chart, this is the level of support where we sort of tested a few times. We did break lower. And look at that. We are actually getting above that level here. So we stayed in this bottom end of the range. And here we are sort of coming back up. Now, let me go down to a 4-hour chart. And on the 4-hour chart, you can see I'm getting consolidation here. Now, what's the next? Where do I see myself entering if I see something happen on the chart? I want this to, and let's have an alert here, I want this to break above that consolidation phase. But overall, you notice that we stayed below this exponential moving average for the most part. Now, that's where it's in a downtrend. And look what's happening over here. It's staying above it. I mean, at this point, it looks like it's testing that level, but as long as it stays above it, I think it's just consolidating. And if it does break out higher, some of the Aussie pairs actually looks decent here. Now, based on what we've seen so far, let's take a look at some setups here. And again, some of these setups I shared on Discord this morning as well. But let's just start with the Kiwi dollar. Kiwi dollar on a daily chart. I'm going to start from the daily. And you can see that this thing, we got double resistance right here. And at this point, it's losing that momentum. It's finally below these exponential moving average. If this start to break further below that, again, I do like it further to the downside if that's where we start to see a continuation. But yeah, this one looks pretty good here. I talked about Aussie dollar, which again looks kind of choppy. It's right against the resistance. You can see not really ready to pull the trigger on this one yet. But if again, same thing, if it does break below the support, I will be interested. But right now, you can see the price action remains pretty choppy here. But overall, this is the prior resistance or prior support. Resistance became support, and now it's back to being the resistance again. So it's kind of consolidating there. The other setups, again, Kiwi Swiss franc looks like a nice continuation bear rally pattern. I mean, you can see this thing is just trending lower. So whenever you spot a trend, you can see those bear rallies. Those bear rallies are good opportunities here. And it continues to be on the weakest side. Here's a daily chart, and you can see this looks like it's just continuing to move lower. Now it's getting into this oversold territory, but it still looks pretty bearish here. Same thing, I think if I take a look at Aussie against the Swiss franc, and that again is very similar pattern. So remember, we looked at the charts and say, hey, let's just take a look at CAD here, because after this CAD little rally here is getting a little weakening here. So one of the pairs that I talked about this morning was the dollar CAD. Remember, this thing has been in a downtrend for the last 3 months. Now it's slowly kind of coming up here, but this is where I like this setup here. It's on a 4-hour chart. As you can see, same thing using the exponential moving average. I think this thing again is a slow moving pair, but you can see where the direction is. So on a daily chart, we are above the moving average here. We're trying to break above this parabolic SAR. I think this is where we could see some further continuation in that momentum. So this one, again, nothing is really exploding higher. Again, you can see that it's slowly carving out. That's why it's important to use the right time frame, which again, I think 4-hour chart probably do a better job, because that's where I can be in the trade for longer and not worry about this shorter term back and forth. Now, when the price actions start to pick up and when the momentum start to get stronger, like that's when you have a good entry point and it just continues to run. And in this case, you can see Swiss franc is continuing to run here. And, talking about that Swiss franc strength, let's take a look at dollar Swiss franc. And here's a dollar Swiss franc, and you can see this thing sort of surprises me, because, I mean, if you look at this chart and you'll see, okay, well, this looks like a little bear rally to me here. So which is telling you that, hey, Swiss franc is probably the strongest currency right now. So as we talk about dollar kind of goes in the second place there. But right now you can see this thing is a little bear rally here. Swiss franc still looks the best here. Another pair that I'm paying close attention to is Euro Swiss franc. Because remember, we talk about correlation. We talk about ranges. And when things diverge, that's when we start to get that big move here. So take a look at the Euro Swiss franc. Euro Swiss franc is trying to break the support that's kind of held in for the most part. So if you take a look at this range here, we've been trading this in this range for the last 2-3 months here. Now the question is it going to fall back below and get towards the 90-50 area? I mean, at this point, today's candle looks pretty bearish here. And I think this is where, trying to decide between the euro and the Swiss franc, it was pretty clear, it doesn't matter you go with. Now we start to get that divergence where euro is actually showing more underperformance. Now the question is, if the euro is underperforming, let me see what the euro USD is doing. Remember, euro US dollar had a pretty big move as well. And at this point, you can see it's just getting towards, is this a bull pullback formation? Well, as long as it holds that level, but if it breaks this level, then you know that maybe euro is going to break, or start going the negative momentum. Now, here we are with the RSI. You can see it's already kind of weakening here. And I think this is where we'll probably see, maybe dollar do a little better here as these some of the other currencies like the euro dollar start to pull back. So I think as far as the risk reward goes, dollar is worth taking a look at. As far as the momentum, I think it's kind of reversed some of that negative momentum, and now it's turning into positive momentum. But remember, some trades are early, some trades are late. Maybe dollar is a little bit early, but that's where if you are spotting a trend change, using the right time frame, using the right expectation, it's not going to explode right away, but you can see where the turn is happening. And that's why I think we can take a look at some of these setups. Otherwise, what you're going to get is that Swiss franc, it remains, kind of in the overbought category and continues to be in that way. So I think if you're looking for that continuation patterns, I mean, even CAD Swiss franc is the one. Well, yeah. I mean, take a look at this one. As we identify that the key CAD is actually showing a little bit more underperformance. And now Swiss franc remains strong. I know I talk about dollar CAD and say, well, I think I like the dollar CAD on the upside. I think at this point, I also like the CAD Swiss franc here as well. So remember, Aussie Swiss franc breaking lower, Kiwi Swiss franc breaking lower. This thing hasn't really broken lower here. So again, on a daily chart, this looks beautiful. Now, where's the next sort of a target? And I think this is the hard part that you might find the hardest, because when you're dealing with those things that are at levels that you haven't seen before. I mean, I've been trading for a long time. Well, I have not seen CAD Swiss franc trade this low. So I don't know where the bottom is. And usually you don't know where the bottom is whenever you do the situation. So that's where when there's not a whole lot of bottom, there's not a lot of ceiling or support, that's where it can continue to push more higher or lower. I mean, S&P or broader markets is a good example as well, because same thing, where we are, we're making new all-time highs. This is the high before here, and it continues to remain strong. So this is where there's not a whole lot of overhead resistance. That's the one term you'll hear more often. Overhead resistance or underlying support. When you don't have a whole lot of that, you can just continue to push that level for a lot longer than you can think. So really, that's really where we are at. I think CAD Swiss franc actually looks like it's ready to go short. Now, what's the entry point and what chart you want to use? But I mean, you can see that this one, actually, daily chart looks the best, to be honest here. This is a high over this little rally. So this is a resistance, maybe using that as a stop and using that as a breakout. Now, let's see if a 4-hour chart can do the same. You can see that 4-hour kind of gives you a better indication here. So this is why I like to use the 4-hour in conjunction with using the daily, because if that is going in that direction, then again, all I got to do is just, I like to use the exponential moving average as my guiding stop, and then see if we can catch a move off of that. All right, so let me know if you have any questions, any setups you're looking at, or are we all on the same page? Then that's pretty good as well. All right, this is the one that I got earlier. Let me just take a look at dollar yen, because I do like dollar yen as well, just from that just from that trade perspective of, the relative weakness. Now you can see that this dollar yen has been very choppy for the most part, but we talked about using the right strategy. This thing has been range bound with some decent range. We have gone back and forth from 142 all the way to 140, 147, 148. So I talked about this where, look at the range. The last time we got above this level, we had a pretty aggressive pullback. Now, over here, you can see the momentum is up. The direction is picking up. It looks like a bull pullback to me. But what I want to see this time is that instead of what it did last time, I want it to hold this level. As long as if it stays that level, or let's say it pulls back to this level and then start to rise up again, I think that's a nice little bull pullback to get long off of. So this thing has been kind of going sideways for the most part. But if the dollar is turning around, if the yen continues to show weakness, then I think this one actually looks the best to me here. But remember, like how we are looking at things, and things look clear on a higher time frame. But when you go on a shorter term, you're gonna get a lot of choppiness. That's really where we are. I mean, dollar yen. Take a look at this momentum here. Even on a shorter term, this thing was so bullish. So that's why you have to identify when things are bullish and bearish, and when things are going the other way. Then For example, we know the yen is actually very bullish. It's very bearish. But then in the shorter term, yen is actually outperforming here. So at this point, I don't want to be jumping on a yen short here until, the momentum sort of fade away, or we get to a certain point on a daily chart. Let's say in this case, this moving average, previously, every time we got towards that level, that's where it broke. So I won't be surprised if we see a bit more of a rally here and rolls over, especially if the equity markets can pull back. I mean, today, price action looks unclear to me, but like I said, this is a daily chart. If I go on a lower time frame, if this stays at these levels and rise here, then okay, well, the risk off move is off the table. If this does break lower here, I think that's where I will be more entertaining a risk off move, which means that stay off from the yen. Probably yen will gain in that situation. And the dollar and the Swiss franc probably do well in those environments as well. Yeah. So all right. So those are the ones that I'm really watching here. Not getting a whole lot of negative news. I mean, if you really look at it where we were just 3 weeks ago, I know there were a lot of things happening in the Middle East. Now everything is sort of kind of taking a back seat. So the markets are kind of in a little very sweet spot here, and it's more a seasonality pattern too. We are in the peak summer trading environment where just volatility kind of stays low unless something happens in the broader markets. But overall market kind of in this little sweet spot here. I mean, last year we had a lot of volatility, but that was a big carry trade unwind that happened in August, or that's where we had a big move. Last year, this is 2024, right here. I mean, last year was exceptional because we got a massive move in July to August. Now, is that going to happen again this year? Well, I mean, we are in a similar situation. We were making new all-time highs and we got a big correction. So whenever you get that big correction, that's when market's going to shift. Market's going to change. But if we don't see that and market just continue to drift higher, then again, I think we'll probably continue to see more of what we are seeing here. But as a trader, it's important to know when to follow correlation and when not to. And if you look at right now where we are this year, we are not following any correlation. The Aussie the Kiwi remains weak. The Aussie remains weak. I mean, if its market makes a new all-time highs, well, if the Swiss franc is a really safe haven currency, well, this thing, had all this move here, and it did pull back, but then here we go back up again. So these are the situations where it's important to follow relative strength and weakness more than the correlation. Now, correlation comes in play when volatility sort of picks up, or we get a strong risk aversion move. And if that happens, again, that's where the question where that's going to come from is going to come from the equity markets. If we get a little slight further pullback, and until that happens, we probably be in a cruise control. But yeah, it's pretty clear the only currency that I'll stay away from if there's a risk aversion move is the yen. As you can see that today, market did pull back, and you can see the yen has actually stayed strong. So this is, I think, right now we're getting an opposite of that nice direction here. So I mean, you can see that where the direction was, it stays below that the exponential moving average. Now in the shorter term, momentum is on the other way. Now that's a good way to sort of stay clear from the yen in the short term. But if we could get to a certain point, a nice little bear rally formation, yeah, then I think that'll be a good spot to short into. All right, so it looks like not a whole lot of question. I mean, I think again, I just trade the markets in front of you as an important thing, and using the right strategy. The volatility is low, so you wanna trade the right time frame here as far as the market goes. But yeah, I wish where we were back in April, where just so much going on, and that's where it gets a lot more exciting on a day-to-day basis. But I think when volatility is really low, things are less volatile, and things are moving. Things are moving. You can see direction is there. It's a matter of using the right time frame and right expectation for it. So again, I think CAD Swiss franc is the one that I will be setting up a trade on, and then I think dollar CAD is the one that I do like further up. So those are the two. And then again, to summarize, and then we take a look at dollar yen. It's pulling back a little bit shorter term, but that's okay. But that's really where I see an opportunity. All right, so let's just wrap things up here. Again, I like the Aussie Kiwi short, dollar maybe Swiss franc long. That's really where things are at. Yen is kind of the middle. And again, CAD is the one that, again, I'll be looking in a short-term shorting opportunity the next 24 to 48 hours. But again, that's where we are at. Focus on the currency in play. Volatility remains low, so keep that in mind as you set expectation or pick that time frame, and then always follow your relative strength and weakness process. Well, thanks for joining here. We'll see the next one, and if you have any questions, go ahead. You can ask those questions in the Discord as well, and I'll be happy to answer. Well, thanks everyone. Have a good rest of the day. Cheers.